then we realized that we should also help them with public relations across all regions. And this is how we came to the like form of formula we have now. And I've been working with a lot of huge RWA projects, as well as like a few really small companies that have large ambitions and great technologies behind. Unfortunately, how it usually works in PR, I can't allow myself a lot of name dropping because a lot of things are under NDA. But I would be happy to share with you like experience from the
Drop the names, Lisa. Drop the names. We're
I
here
can
for the juice.
I would love to, but I cannot. I appreciate my job. And of course, I would be happy to share with you the journalist perspective because I communicate with them a lot and I hear like the feedback of those who actually would cover or avoid covering your news and what they ask me, what kind of clarifications they need. Everything related to that, I can share.
Wonderful. Thank you, Lisa. And just to give you a small intro as well regarding what I do a lot of advisory based out of Dubai. And regarding my role with the block as well, we do a lot on the RWA side of things as well. And we are actually organizing a big RWA conference in Abu Dhabi during the Abu Dhabi Finance Week. It's on the December 8th. So you guys are all invited. But that said as well, if any member of our audience as well is interested, there is still a number of exciting things happening. So I'm very happy to have that conversations. Please do reach out either on LinkedIn or Instagram as well on Aspid Car. That said, I do everything advisory on Dubai, mostly on growth and partnerships. So always happy to have a conversation regarding that aspect. So thank you all for joining us, and I'm excited to dive in deeper. And as always, just a little reminder, GPUverse is not an online series, it's more of a global movement. If you join in-person events, you can also get complimentary GPU compute credits, networking and hands-on sessions with the developers, the founders and investors building the decentralized future. So let's jump right in. I'm going to ask a question, setting stage. So basically, tokenized assets are gaining traction globally. Before we get into the specifics, how do each one of you see AI changing the landscape of the RWA and the real world assets? And how do you describe it? That's one of the most important things for me. If you have any specific codes or any specific things where to make it as dumb as possible for the general public to understand, because I see till today, and it's going to happen for at least a little while, where people are not as familiar and they don't understand the technology right. Who would like to go first?
Yeah, I'll jump in. I think to answer, I think it just goes to being, faster, more accurate pricing. So if you want to talk about tokenized assets, AI turns the raw telemetry, the market flows, the macro data into repricing signals. So the token prices will, essentially reflect forward-thinking risk instead of stale appraisals. And what would that do is turn assets into data factories. Essentially, all of those, the value depends on the data quality. So that's what AI is for. It's about turning the data into a raw material and it spits out some answer or a prediction or something that will be used for greater good. In the essence of RWAs or real estate, there's tons of data out there. Each piece of real estate or each piece of land or sale or transaction opportunity, transfer of ownership, all of these are little pieces of data that will in turn help the future pieces of data or RWAs in that essence, or real estate for this example, into a better asset. What is better remains to be seen. What is faster and stronger remains to be seen. What part of the industry are we trying to make better, faster, stronger? But all of this, if we're talking about the blockchain, specifically of RWAs, because remember, not all, again, just going to real estate, not all real estate needs to be tokenized in crypto, as I said in the intro. And not all tokenized assets have to go on chain. These are all things that are misconceptions. However, it does make a lot of sense where the convergence of blockchain and AI and then talking about RWAs make a lot of sense because of the new on-chain products. On-chain is the most important part of this, and more on-chain and more of the data it spits out, the more powerful the tools for the future of this whole ecosystem. So I do think that the assets are data factories, and the AI is processing those data in those factories and being able to produce a better forward-thinking product.
Thank you, Kevin. That was pretty interesting, and I like the initial part, what you said with it as well. So, thank you. Surya, what do you think?
I mean, I've definitely aligned with Kevin. When we talk about tokenized assets, I think the fundamental question that we all has to ask is why are we even confusing people with a lot of terms and jargon words, like because people really know what is real estate, but they really don't like what is tokenized real estate. Like, what is this? Is this a sort of a new, some sort of a crypto asset? Like, because I've been meeting a lot of people, I've been connecting a lot of retail and institutional investors throughout my product journey, and they always ask a question: is it like a crypto or is it not crypto? So and it's sometimes so hard that some people really don't even know that the difference between the fundamental layer of a blockchain on top of crypto and then assets on top of that. So I think we always has some sort of responsibility to tell that story like a 10-year-old kid to the people what this technology is all about. And sometimes we mix with different technologies, like in you know uh, infrastructure layers, the DPIs, and all that. So good, your industry experts, we good to know, but end investor or end user might not know those. And in fact, you don't need to even really care about. I mean, like, who really asks how's internet protocol really works, and then only I'll use a internet, like using Google. Like, they use Google, they really don't know about the backend. So, and they
Correct.
don't really have any value on that. So I think we need to set the standard of communications when in the entire Web3 space and the AI. And it definitely, as Kevin really mentioned about that, when we talk about assets on chain, that's the great strategy that we have to look into it, because right now most of the assets are illiquid, right? And also not affordable at all. Like, think of, I'm sitting in Hyderabad, would like to invest in Thailand. I think someone mentioned someone traveled to Thailand or Indonesia. But do I able to invest in a small money and have some piece of property there? Right now, no. Right, which means there is a clear blocker. There is no accessibility, right? So I think tokenized assets, the way we adopted crypto, people started seeing that, oh, okay, instead of investing in a random meme coin or a speculative asset, why don't I try with an asset which gives me monthly rental income and just try out with as low as just $100. I think that's
So,
definitely a big move. Yeah, yeah. Go on.
no, so you have a very valid point over there, and like as we all know, like I mean, the fractional ownership concept as well is already available in the market, but coming in and changing it to tokenization, that's where the technology plays a role.
Yep.
I want to dive deeper and ask you both, Kevin and you as well, about this. Lisa, give us your 2 cents on it.
Yeah, sure. I was actually thinking about, I want to add my 2 cents specifically in this kind of impression about that people always thinking like clear and understandable and preferably fast ways to invest. So whenever ever since blockchain appeared, we were like thinking about how to actually use it in real life, and RWA is like great way to use blockchain and have real life value from it. But it still a lot there are still a lot of complications, and whenever complexity comes, there is also human factor, a lot of human mistakes, like a lot of time to spend for research. And it becomes like a big gap between like I want to understand blockchain technology, and here I invested in RWA. It's like a lot of steps to take, and people are often not ready to take it. Plus, we are seeking optimization tokenization, we are seeking the technologies because they are transparent, they are fast, and they make our life easier. And here, where like when AI joins the game, we can actually lower the barrier of entering RWA, which lowers the barrier for investment and make it more accessible. So it's like two layers more accessible.
I love it. Thank you, Lisa. So, like, I mean, we established a number of points, like from the data factory side of things, from Kevin, from the accessibility, the speed, and also like there's a number of factors. So, like, this is going to be life changing. I was like just yesterday, I was having a very deep conversation, and within that conversation, a number of things we were thinking about, and one of them was like, okay, what is it, a technology that's going to be available in another 20, 30 years from now, which is going to be like people are going to look at it and they're going to say, how were people transacting without it? And I'm thinking there might be a huge probability that tokenization of assets might be one of the major ones as well. So regarding these points, Kevin, do you want to expand more on it? And like from your experience, you've been in it for a while as well.
Which point exactly? Sorry.
Well, we spoke about a number of points. Like for
Right.
me, the accessibility factor is a huge issue.
Sure.
Like, I mean, we
Right.
already have the fractional ownership concept. However, now having the blockchain and the AI playing a huge factor on top, that makes a huge different kind of a shifts the game a lot.
You know,
So
yeah, like I'll go with the biggest markets in the world, and that's ironic. Not just because I'm American, but the American market, the retail
not that you're
market.
in America now, but yeah.
Yeah, well, when you have companies like Zillow, a couple years ago, out of the financial crisis, they came out of nowhere, really came out of nowhere, and that was only because of their tech, the way they were able to justify asset values. Now that's up for debate whether those asset values are accurate, are fair, are modeled correctly. But for sure, now with the advent of AI, they're not doing anything on the RWA space per se or tokenization space yet.
Not yet.
If they do, they can truly dominate the market if they wanted to. But if it ain't broke,
Especially
don't
with the
fix
data
it.
factories that they have, right?
Sure, exactly. That's exactly what they are. But as we say in America, if it ain't broke, don't fix it. So they're printing money, doing what they do, and now that their data is stronger than ever, the AI side is really exciting as well for companies like that because they have such a large amount of it. Now, the fairness of the pricing or the fairness of the model is a whole nother thing. I know I looked at the questions, and I know that we might have a segue question here. So it's about the pricing and the fairness of that side and how it works. But how is it going to be accessible? To answer your question, it's still not going to be as accessible as we think. You could buy Bitcoin at 10 decimal points. You could buy Tether at 12 decimal points. Yet we still don't have 100% of people in the world investing. So with just $1 or 1 penny, you can invest in these different assets. Yet we still don't have people investing in the beautiful assets such as Bitcoin. So what's going to give just so that we have accessibility into real estate at $100 a piece? We just don't have enough people investing.
Well, I would like to like concur a little bit because with the Bitcoin as an asset, not a lot of people are as educated, and
Sure,
it's a new kind of an asset.
sure,
So
right.
comparing the something which is a bit more classic and people are
But
way more familiar with, and
try
having
to
access to
convince
it.
your dad that to invest $100 into that offshore Tokyo high rise that he's never
Right.
seen, he's never touched. He saw a prospectus, or in Dubai, or in Indonesia, or in LA. Try to convince him that, hey, Dad, you only need to spend $100 and you get a piece of this. He'll be like, of what? $100 of what? Oh, you get 0.0001% of this beautiful building, the new Trump Tower, the new Burj Khalifa, the new whatever. Like, still very difficult to get that community on at $100 a time. It's still going to be our age and under range, the upper millennials and under, that are extremely excited about this product. So accessibility for them already exists in other assets. Tokenized stocks are around the corner and happening in EU, and they're still not that popular. It blows my mind, but I'm in the game. You're in the game. other people are not in the game. And so in America, something like 64% of people don't even own stocks when the stock market is roaring, right? Not
Absolutely.
today. Today is a really bad day. And crypto as well, but that's a market correction, and it's going to be a rough one. So hold on. But and then so days like today, how are you going to convince someone to take $100 to buy that real estate, that new hot real estate in Bali or Thailand or the wellness center in LA? So it's still accessible, and it's amazing that it's accessible, but we're still a long way away from getting millions of $100 buyers. Rather, people are still trying to buy their first freaking home in our age range. They're trying to figure out, how do I buy my first home? By now, my parents had 4 kids and 2 homes at
Well,
my age, So I'm here sitting at my age and trying to figure out, and the entire generation is, how do I even get that down payment for the home? So what's $100 of one home in some foreign country worth to me? Again, I'm in the game. I'm just playing devil's advocate here, right? So accessible, yes. Affordable, yes. Educationally, is it valuable? I don't know. I really am up for debate. I'm building these things, and I'm still
Kevin,
trying to
you get
understand how to sell it. It's a marketing play. So when you
Kevin,
got
you
like
gave a
companies like Get Steak, I believe their name is,
yes, correct, in
you know,
Dubai, and he has a
that's a
number
good
of them as
example.
well.
But they should be a $10 billion company right now, given their location, given their regulatory status, given their opportunity of purchasing power at such a low demand. But they're not, because people in that country would still try to find a way. How can I get my 33% down payment so that I can get my 66 from the bank and buy my first freaking home? Not $100 of a home. I got to feed my kids, you know?
Kevin, very valid points. You said about that one specifically, which is on the fractional ownership.
Yeah,
And that said, one of the things that tokenization and this will solve is the liquidity aspect. So
sure.
once you
Right.
even buy with GetStick or anyone else, offloading it, which is basically selling it off, is another not that easy of a procedure. So
Right.
it's a very good point.
And just to add on there really quickly, the point of what that you're making for liquidity is the dream of on-chain assets. That's the dream. So when you have a dashboard very near in the future, maximum 2
Exactly.
years away, you're going to have your Charles Schwab account or wherever you trade your stocks. So in one click, you can trade 100 Tesla shares, and then you can
Yeah.
trade your FX, $100 of euro to USD. In one click, you can trade 1% of your Hawaii home in Hawaii. You can also click to buy that classical car from 1932 in 1%. It's going to be on one dashboard. And the only way to get that to happen is through an on-chain, tokenized version of fractional ownership that, again, will be on-chain. So that's the holy grail. And we're headed towards that.
Absolutely.
And I love guys like Robinhood who are trying to solve that.
Correct. And you gave a very valid, like you gave a very interesting statistic, which was you said 64% of Americans do invest in stocks, and the rest they don't. And this is a very interesting fact, which I know of as well. It's around like 60 something. So it's very interesting, and that is very true. So even with technology coming in, it just depends on the taste of people who is investing or not. So thank you very much for that side of things. Suresh, what happens when tokenized assets are paired with AI insights? How do the combination change with how we analyze, how we evaluate, and how we transact with RWAs?
Perfect. So great. So today I was just listening a good podcast from someone from Dubai. He's been into fintech space quite long time. He mentioned really one good point, that hey, you know what? Right now, most of all the fundamental layers, like the infrastructure layers for the both AI, like billions of dollars poured in AI now, the technology, and also on the Web3 space. So we don't need to build another Ethereum. It's already there. It's on chain. It's there. So I think we sorted out the first biggest problem of investing in those infrastructure layers, which is basically, I call this as like highways. Like all we need is now vehicles to run, right? So think of that. Where are we right now? We are in 2025, 2026. We are now talking about those vehicles. No longer, no need to talk about the way, how to build a bridge or how to build a highway, right? So come back to vehicles. Example, take an example of probably how many people really know, like private equities market is like 1,000 times bigger than the public markets. No one really, like most people really don't know, right? But people really know how to invest in public markets, as Kevin mentioned. Robinhood is doing really well, bringing all the stocks into tokenized so that anyone can across countries can invest in. But it's still public market. And what about private market? Consider that it's like a another Tesla car. Okay, it's another car. It's not the first car. It's the second one. So your question, when we talk about these financial instruments, right? The biggest issue right now in this entire financial industry is the real-time data inference, and that can only be solved with AI that we have. Think of bringing a property. So having a 6 months valuation report versus having a consistent real-time valuation reports and risk scoring information that travel across on-chain to off-chain. Right now, is that possible? No, because we've not interconnected the financial infrastructure layers and the AI solution. So
How would
that's
that
where
be
these
possible? What do we need to change?
yes, that's exactly what agentic tools we have. I mean, now anyone can build really great agents for specific, as I said, and we've been working on building a specific set of custom agent for our property valuations, right? So because think of when we bring a property, think of a market like Dubai, we have to validate at least 100 properties and its documents, valuations, risk analysis, legal opinions, and whatnot, right? And do you really think we have that much of bandwidth to really like spend a lot of days and months to do manual verifications? No, that's exactly where we start building agentic AI tools on top of that to do that automation, while we need exactly what we need to push
Who
the
do you see
data
doing
to
this kind of
on chain.
who's doing these kind of innovations at the moment?
So, I mean, obviously, there are a lot of companies who's been working in Dubai, and we as Riser has been forefront on that. So, we believe in these interjunction between the financial instruments and the power of AI, right? So, I consider that as like, this is a great opportunity to be here working on these technologies. Yeah.
And like basically, can AI realistically assess the risk between the fair
Yeah.
pricing and like let's say with the fragmented markets and
Yeah.
with all these data sets and like
Yeah.
Kevin was mentioning as well with all
As
these
Kevin
data
mentioned
factories
about
that are out
Zillow,
there.
think of
Exactly.
yeah,
So
think
there's
of
all these
Zillow.
data,
Zillow is
and
a
how are you guys even
data
working
powerhouse.
with powerhouses like Zillow? Are you doing partnerships? How are you guys approaching this?
So exactly. So I think there are certain countries. I mean, obviously India doesn't have that much of data on at least digital. Forget about on-chain for a moment for properties, but we are working on that. We are like a little bit of early markets comparatively, Europe or Singapore or even Dubai in this case. Example, Dubai has most of their property data digitally through the DLD, like
Correct.
as Kevin mentioned.
They're
Think
very
of
much
I can
ahead of
buy
the game over there.
0.1% a share of a property directly through Dubai Land Department. I don't need to go to Dubai Land Department to say, hey, can I
Correct.
buy the token? You can do that on online. How? Because they have the data of the entire market, right? Right from valuations, reports, everything.
Correct.
So the question here is, does every country, like example, take an example of India or Thailand, does the country has the data to be processed? Right now, I don't think so. It's a question mark. So when we talk about a large scale, adoption and infusion of these technologies on the very old school assets like real estate, it takes time. I don't think that happens like the way how AI picked up. But it'll take time, but it's stable. You see that
Correct.
what happened with RWA? RWA has been there quite long, and it's still there. It's going, and it's not like NFTs where okay, there is a celebration and gone. So I think I align with Kevin. Definitely, we see a great potential between AI and Web3, with one side automation, one side the trust, and imagine those two combined together. What else the investor needs? A trust and the automation.
Got you. Thank you, thank you, Suresh. And Lisa, let me ask you, with the verification being a major bottleneck, like, can AI actually validate ownership, documents, real-world data in real time? And what does it unlock for RWA adoption, in your opinion?
Um, when we're talking about the data and how AI helps RWA get more trusted, I just want to maybe add a little bit of points again about trust, because when I heard Kevin saying like, imagine you asking your dad to invest $100. So before we even come to the discussion of what kind of data can be processed via AI, we would have to pass through the stage where like your imaginary dad asks you like, would I be scammed? And it like a lot of projects that are actually making announcements, not following their announcements, or making deals, not explaining what they are going to do, or like their overall association of cryptocurrency with RWA and perception of this as like being the same. Sometimes like people of older age, they don't even understand if like meme coins and stable coins are any different from RWA assets, and if the technology behind it is different. So what we would have to do as stage first is we would have to bring more clarity and more transparency and more understanding, and it should be made step by step, and plus it should be gained by every market player, understanding their accountability, not just for like to their audience but also to the broader market, because whenever they are making false promises or making deals they are not going to follow up, they are putting like the entire industry perception under risk, and so they are putting under risk broader adoption. And the same goes to like AI being able to process this amount of data. I don't think it's a question of like if technology has the ability to do it. It's more of a question if we will have enough people willing to use AI to like let it um, uh, process your documents voluntary. And like it's interesting question because at the same time people can tell a lot of sensitive information to ChatGPT because like they don't really care how it works then. But when it comes to investments and when it comes to industry that is perceived more seriously, there can be a lot of questions of like if it can be achieved from the standpoint of regulations, if it can be achieved from the standpoint of like enough people being ready to open access to their data, and enough people willing to enter this technology. So I think yes, but we would have to take a lot of steps specifically related to transparency, to accountability, and to education of a broader audience before we will be able to reach the point where AI is actually processing those data.
Very true. So education comes in a very valid point, as you said, and I think regulation has a huge role in it as well. The UAE is leading, as we know. Kevin was here. Lisa, you're already here as well, and I'm sure Surya visits us over here. So there's a lot going on within the regulatory aspect of things. Let me ask you something else, Lisa. With the looking forward with AI enhancing the transparency aspect of things and the trust in tokenized collateral, especially for institutional use, how do you see this playing out?
From media perspective, I can see that a lot of people will be questioning this, and a lot of people will be raising like big question marks on their LinkedIn accounts, on their X accounts, and like uh, having some resistance. So we would have to do it gradually. And when we talk about people accessing this industry, um, we would have to make sure that everything is actually compliant and that all the licenses are relevant, and that if the company is operating on a specific market, it's the company's responsibility to understand how people may act. Because like when we talk about tokenization plus data, we can see that people are questioning like, if I'm in this location and the company is there, would there be any conflict of interest that will prevent me from actually getting my money? So I feel like I'm a little bit apart from what you asked me. If you could just bring me back to the point, I would
No, no, no,
appreciate.
that's more than all right. Like I got the answer, and basically, as you said as well, I really believe the regulation plays a huge role in this as well. And I mean, within the UAE, from VARA to ADGM, and we have other regulatory authorities as well, and the central bank playing very major roles in this. And it's coming slowly but surely as well. Kevin, since you've been working on this as well, like you've been working on it for a while, one of the biggest promises of RWAs is unlocking new yield opportunities. How do you see AI helping investors earn better yields and optimizing portfolios to build tokenized assets and maybe even like some sort of an ETF and everything else that comes with it?
Yeah, so just really quickly on regulations, all of that is great if the title deed goes on chain, right?
Correct.
Which is what's happening in Dubai. It's a smaller retail market, but it's the strongest option right now because the process is on chain. So
Correct.
once the title deed goes on chain, then you can do the entire process of tokenizing an asset, whether it's the tokenization aspect, whether it's fractional ownership, yield, all of that. Yield has yet to be unlocked in all of those markets in its full form. So that's yet to be seen. But to answer your question, the AI side is going to democratize the access. So the AI side is going to essentially allow the tail risks that require the agents to do what they do, to use the same signal. So we essentially need to design the diversity and the strategies and the liquidation rules, fee compression via automation. We need to be able to do all of this that allows yield to be generated properly. Underwriters, auditors, portfolio managers, they all need to be partially automated. They need to be automated so that fees get lowered, leaving more yield for the investor. If we cannot automate all of these most important roles, then the fee won't be any lower and it won't be any more worth it to just do it the traditional route. If it ain't broke, don't fix it. That's what we say.
Exactly.
And so,
Yeah.
especially in real estate, one of the oldest living businesses in human history as our modern economies exist, from the tulip mania all the way to the financial crisis, CDOs and packaging of garbage loans and things like that. What's any different if that happens again on chain? So we need to validate, we need to audit, we need to leverage the AI to be able to front and safeguard that through guardrails. And so I think,
On,
yeah.
on that note, like let's say, who bears the liability if an AI agent makes a bad financial call? Would it be the developer? Would it be the deployer? Or would it be the token holder? Like how does that work?
Yeah, I mean, in essence, all of those equally, but it's always in crypto. If we're going to talk on chain and crypto side for a second, if it's going to be sold, like I said, through stable coins or even opportunities of cryptos, Bitcoin, Ethereum, or otherwise, it's always going to be the deployer. Not always, but the deployer is the most,
Has a major
we
responsibility.
had a hiccup in Mantra, right? So look, if we can't talk about these things, we're never going to grow, right? It was a massive hiccup. It wasn't malicious. I want to state that if you, from the research I've done and from the people I've spoken to, it wasn't necessarily so malicious. It was a market maker hiccup. However, the hiccup was pretty massive, and it does destroy the opportunities of those billions of assets that were about to go on chain through their partnerships of some of the largest developers in the UAE and the
Crazy,
world.
correct.
So if you have those hiccups via the deployer, then it becomes really hard for what, like Surya said about the trust. That five-letter word is the most important thing that still props up things like the US dollar. As much as we want to hate America and the politics and everything going on, it's still the trust and transparency of the system that makes sense. You will get your money back if you buy those treasury bonds. We'll take the burden as U.S. citizens. we'll take the burden on the inflation and deflationary assets. But if you want to talk about crypto and getting on chain for real world assets, for the yield that you mentioned, and then how to safeguard those, It's all of those. It's the underwriters, it's the auditors, it's the portfolio managers that all need to be automated. And AI through agents or agent managers can do that. We can do that right now. We don't need any other help. The regulatory framework needs to be such that it safeguards the end user, which is why US at the biggest retail market in the world will always be last. We will not be first to tokenize these assets, obviously. We will be last. And then something like Europe is an absolute mess. If you want to touch crypto and these assets, it's an absolute mess because
The
Mika
whole
is an absolute mess, right? And you can just cannot do it. Hey, as an American, I'm super happy because you guys used to shoot us for saying we're not taking American money. We're not taking. Now with the Genius and Clarity Act, Americans are back in the picture, but the EU with the Mika is a total mess, and they shot themselves
absolutely.
in the foot and
And
went
this
10
is
years
where the
backwards.
UAE is leading a lot as well with the regulations, with being the leaders, with all these new legislations coming in as well. I want to ask a question to all of you, and please, whoever has an answer, please shoot. Like, are there any real world pilot projects that you guys see that you want to point out as an example where AI materially improved the RWA return or the risk management, or any specific projects that you see, okay, like this was actually like a cool project going on.
So I mean, it's ironic that maybe I don't know if it's a competitor exactly. I wouldn't lie and say I know a lot about GPU Net, the company here that's hosting today. I wouldn't outspeak something I don't know, but something like a BitTensor is extremely exciting. It's not at the RWA corner, but it's definitely at the AI and cloud compute corner. So if a real world asset is compute and the power of compute, and we need more of it, and it's difficult to access. It's very expensive. So something that maybe Anthropic needs to spend 60 million for on the BitTensor network, you can spend 1 million for. And the opportunities at BitTensor and TAO, not just the token, but the community and their subnets are each solving a problem. And some of those problems are very expensive problems. So to loan more compute and to mine on the network is very sophisticated. So being able to do that through AI platforms and using the power of your powerful AI to produce more. Of course, you need the GPUs at the ground level. Without that,
This
nothing
is where as
changes.
well the GPU.net comes in as well, like solving pretty much the same kind of an issue as well, which
Right.
is huge because I mean, like the
Huge,
market is
very
absolute
expensive, very
correct.
expensive, and very needed at all levels, from the startup level all the way to the enterprise level. And so it's
Absolutely
extremely exciting. If you, well, I don't know the quote, and someone much more famous said it. It's like always solve the hardest problems, right? Don't go for the easiest solutions or problems. Go for the hardest possible problem that you can solve, and you'll always be extremely successful. It might take a long time, and so
correct.
that's where we're at the corner of what you
I
mentioned,
don't know if
what
it
your
was
question.
Jeff Bezos, but that said, it just reminds me of Jeff Bezos and how the whole cloud computing and AWS came in as well. Once because they had so much computing to do during certain specific times, all these extra layers, they actually thought, okay, why don't we do AWS? And that's the beauty of innovation and finding a huge problem and then solving it out. Lisa and Suresh, is there anything as well that you guys know of any specific pilot projects that might sound exciting or interesting as well?
I
Definitely. I mean, see. Oh, okay. Sorry. Go on, Lisa.
Let's go with
don't know.
Lisa and then
Oh,
we'll
oh,
move to
sure.
Nusret as
Oh,
well.
okay, okay, sure. I wanted to add like just a quick thought. It might be not like a brand new thought or not something exciting, but it's actually really important. You mentioned before like accountability in Kevin's response about like who is going to be responsible if something goes wrong. Who is it? And it's actually related to the question you just asked, like what kind of projects are going to impress me or going to like stand out from others. And I would say that first thing that I pay attention to as a PR manager and somebody who worked with a lot of projects who do tokenization or claim to do tokenization, I can say that I go and check what kind of team they have. Is everybody's public? Is it just CEO who is like public and who is the brand voice and not necessarily even understands what's going on? Do they have CTO? What kinds of developers teams they have? And actually, like I tend to trust more and be more impressed by companies that might be not as loud or not have partnerships that like employ $1 billion or even more in their like headlines. But I do check if there are people who are going to be accountable in case if something goes wrong. Do they have like legal team? Are they visible? Do they have developers? Are they visible? Etc. etc. Because like it's oftentimes, and this is like the bad part. I'm again playing this game against RWA while I'm in it and fully believe in it. Like it's not like rare occasion where we see that if anything goes wrong, there is nobody who is going to take responsibility, and we don't even know what kind of sanctions can be employed and to whom. So the first thing I do is I actually check like who is responsible for which part and if we will actually be able to reach to them to make them answer to us or like ask them for help in case of crisis.
So I think
Great.
I
Thank you,
have a
Lisa.
couple of pilot projects to discuss. Most people really don't know. Kenya Capital Markets Authority Kenya has been working on tokenization quite long time, and they recently came to limelight and they've released some bills just like what Hong Kong released, and very few people know like think of like Kenya is so proactive that they're like they know that like they wanted to leapfrog, they don't want to run, they want to jump, right? I think that very few countries picking up, and you please go ahead and see like what Capital Markets Authority Kenya has been doing it. And we're privileged that we've been working with one of the asset tokenization platform who got regulatory blessings from Kenya. I think these are some sort of hints that we can look into it. Apart from, we all knew what Dubai and UAE, like the UAE's market, especially with Wara and the DLD recent partnership, made a really huge momentum, right? But I think there are countries picking up. I sometimes support regulations one side. I'll also hate regulations, to be honest, because they're little slow decision makers. But sometimes I believe I think they take some time to make sure they learn a lot. Their goal is to build sustainable regulatory frameworks. And we've seen what happened with crypto, right? Like, see, crypto is the best if you truly understand the power of it. But at the same time, more than 80% of scams happen within the crypto. It's just because lack of knowledge by the end retail investor. It's not crypto problem. It's not blockchain technology problem, right? So, and there is no regulatory framework on top of crypto, and we hate that. We don't want that. So, and regulators really don't want to do that kind of mess with the tokenized assets, be it private securities, private equities, debt instruments, bonds, even royalties. Like I've seen one project in Dubai as a pilot project. They were actually tokenizing the horses, you know
The
uh,
horses.
yeah, horses. It was like, cool, man, this is so good. Like, think of who really believe buying some sort of equities, sort of a share token is just represents a share of a vehicle or a horse or anything, or
Exactly.
even
It's a
asset.
vehicle to actually get that thing done.
Exactly. And think of, I can buy, like, put some, as someone mentioned, Kevin mentioned, buying a fine. I'm excited, but my father doesn't. He don't really care. So, yeah, I mean, definitely a lot of pilot projects are happening across the countries. And the beauty is, even states within the countries are also like picking up, and they now realizing the power of bringing their assets on chain. Like, really, they're like unlocking the biggest economy that they have. And I call it as debt capital, right? There are states in India recently moved up, like how to unlock these debt capital. It's been there for hundreds of years. Like, so I think regulatory frameworks and bodies are also proactive. That doesn't mean everyone is proactive, right? So we have to work along with them, help them whenever they needed. They've been very proactive, conducting sort of a lot of meetups and events. Now they're actively participating, which When did we hear regulatory bodies will participate in a Web3 events? We never heard such things, but now they're participating because they want to know more about it, and then they're cross selling their policies, cross collaborating
Exactly.
those
And they want to
policies
be a
between
part of it
different
as well, and they
countries.
want to be set up. Correct.
Exactly. So I think, yeah, we are in the same direction. Definitely, this is we are not building for products for ourselves. Also, it's not for our even fathers. I think we're building products for the upcoming young generation who really knows the
Right.
Correct.
digital natives. Yeah, yeah,
But the thing is there, Surya, is that and knock on wood, I would love for my family and parents to live for another 20, 30 years, which is look like it's going to happen. So the purchasing power of the world of the boomer generation is a 90-10 split. They own 90%, if not more, of the assets of every country in the world. So from India to America to Dubai, and knock on wood, they still have another 20, 30 years to go, which leaves us out of the game for this. And that's not cliche to say. That's not just a statistic. That's fact. So what's going to happen? For the longest time, the banks were asleep at the wheel, and so were the institutions. And a lot of them are still asleep at the wheel. They have no idea what the hell is going on with this with these assets. J.P. Morgan finally just got on board because their buddies at BlackRock called them and said, you can probably 5x your valuation if you just go on chain and tokenize
yeah,
these assets. And so that's exciting. And you got people championing for that. But a lot of the private banks, a lot of the third world countries around the world, and a lot of the largest countries in the world, like Turkey, Vietnam, Iran, these three populations, about 300 million people, they're still extremely far behind. And by the time they catch up, it'll be, our generation will be in their 50s and 60s. So, I mean, the reason why I bring up that father example is because, again, if it ain't broke, don't fix it. And so what the banks are doing, especially in like DeFi or CDFI now, they're going to convert those savings yields or high yield savings CD accounts that are 4 to 6% in America, and they're going to put a 5 to 8% now, and it's going to look like a DeFi wrapper, which will be on the new digital dollar or USDT, USDC, USD1, on any of these stable coins or any one that still hasn't come out yet. So it's just going to be a wrapper for fiat to go into a digital asset, but my mom can still click that button where it just shows the yield that's going to lock up for 3, 6, 9 months at a time, except for it'll be digitized and yielded so that the back end, these guys in the banks can make 10, 20, 40%, just like they have with fiat for the longest time, except for now it's with the wrapper of DeFi. And they're just not going to call it DeFi, obviously. My mom will never know what is going on. She's just going to convert what used to be 4% CD accounts into an 8%, digitized account, but it's got to go from her dollar now to a USD1, USDT, something like that. Again, none of that language will be in front of her face. And so when I say my dad's not interested in buying $100 of real estate, it's because the interface, the UI, UX is not there for him to
It's
understand
the
that
consumer journey.
it's
Absolutely.
$100 of real estate. Once it understands that it's exactly the same feeling as you put a down payment and you get that title deed like he did when he first bought a house or a car or whatever, then we're on to something, which is why I said we're all in the game, right? So you don't need the education that they need. But it took all this time, 15 years, and that's a long time in crypto, to finally get to this point where banks are going to offer yield solutions on digitized assets or Bitcoin or other cryptos. And so what is
yep,
that going to look like for like real estate or commodities? We're still a few years away from that. Of course, regulatory for sure. But the final piece is the UX, right? The user experience of how that asset is transferred from fiat to digital currency to clicking the button of those yield generating opportunities or buying that home.
yeah,
Like we said, at $100 a time. So I still do believe we're a few years away from it. And again, I'll say it a million times: if it ain't broke, don't fix it. So in real estate, there's trillions and trillions of dollars. What's going to happen to the agents? What's going to happen to the brokers? What's going to happen to the middlemen? All of those broker houses, all of those need to disappear. So what's going to happen? So when they say AI is coming for your job, it's that part. It's not AI
Exactly.
is coming for
I
your job.
agree.
Kevin using
Kevin.
AI that's coming for Kevin not using AI.
Yeah,
And so
yeah,
my
Correct.
broker dealer or my agency is going to beat your agency because we've gone completely AI. Again, UX, right? The UI
yes,
is also very important. So we're still a few
and
years
it's
away from that,
proven.
regardless
Yeah,
of regulatory.
Yeah,
And
it's well
absolutely,
proven. I
so
think you nailed out with the the fundamental sweet spot of UI UX. Being a UX guy myself, and there are very few companies like you see, like use. I think you mentioned about Robinhood, the best UX ever existed, and one of my uncle from UK, opening up a bank account in UK like just before Revolut and a couple of all these digital platforms came was nightmare. Like they asked you a lot of a lot of things like, and your goal is to open up an account like this, right? You just get that identity proved and get the account open. And it now Revolut already proved that, and it's now $1 billion valuation company in the shortest period of time. No bank proved it, and it's purely because they know exactly. And I think of a 56 years old person now using Revolut than the old legacy banking system, which is just dead. It's dead.
But that's
So
why the UK and the FCA is actually scared shitless, because they also don't know how to get in front of that. Which is why, like,
yep.
the digital identity is coming up. The maximum spend for stable coins, or how much you can have in your wallet. I believe they announced EU, not UK, but it was 20,000 or something like that, which is
Yeah.
incredibly small. Whereas in one click of the button in the UAE, you can transfer 500,000 dirham without anybody asking where, what, and how, because the numbers
Exactly.
are irrelevant. If you want to do business at a larger scale, it's very difficult to do that at $10,000-$20,000 limits, especially in stable coins, because again, in crypto, if you're a trader, there's no wash rules. And then if you're in a transaction like real estate, what's 20K going to do for you, right? When you're trying to transact in real estate, again, at $100 a button, great, good for our generation and younger, but not good for the older generation who are still transacting in much larger amounts and numbers.
absolutely.
Yeah.
So, like, let's say if we imagine 5 years ahead from now, where does the future of AI powered like real RWA look like? Like, is it more smarter markets? Is it more automated compliance, self-pricing assets? Where do we go? Like, I would like to ask this to everyone. A very quick and short answer. What do you think?
First, as Kevin mentioned, the data has to be on chain through the automated rails using oracles. Again, these are agentic oracles. Forget about the traditional oracles that we've been talking about in crypto, or sorry, in the blockchain world. So that I think that needs to be sorted out, and there are a lot of players working on that space, thanks to platforms like you guys. And once the data is on chain, real time automated, and then the next one is the validation of the data, right? So it has to be reviewed. As Kevin again mentioned, it should not be manual. Why do we need even regulators? They tick mark, tick, 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 tick. Please, let's automate it. Let's put that on chain, validate through agentic AI tools so that they do the background work, and you just watch. You have the eagle eye on top of the data, so make sure nothing is goes wrong. No bad actor comes into the picture. So, and then enable the interoperability between the platforms and the solutions across. I think of that again. I think somehow we're going in the same wrong route. Like initially when banks started, every bank has try their own solution. Like you can't open a bank account from there. They figured out the interoperability between banks. Now you open up an account, you go with another bank like in seconds. But now in the same blockchain Web3 world, someone who's building something for, let's say, real estate, someone who's building something for private equities, and now as a user, tomorrow, not today, probably after 10 years or maybe probably 5 years, if we could not sort out this interoperability between the assets, again we end up with the same jargon, the issue that we have today. So I think that the third one that we have to solve is the interoperability, and the fourth important one is the trust. And the trust comes with the proper education, proper awareness, like these kind of VMAs. Probably some people must have watched this. We should reduce our jargons of AI and blockchain and Web3, and talk exactly how the elderly generation, as Kevin mentioned, they are the 90% purchasing power. I think we have to talk according to their knowledge. Start gives a little bit of push, and they at least experiment. Now people can experiment investing with $1, going to Robinhood just to try out.
Right.
There is no harm of trying out with $1, but it's definitely a bad decision if they can just put 100K there. So The fourth one is the trust that comes with education. So if we solve these four problems, there's nothing to do with technology, if you see, except that Oracle's part or the automated agentic part. So we can see that in probably next 10 years, most of the assets would be interoperable and cross border, so that anyone can invest across both private and public markets, including the assets like real estate.
Thank you, Suresh. Lisa?
I also believe that we can like anticipate more clarity and like easier international transactions. We already experiencing it, but I believe that there are more levels to which it can come. And by clarity, what I mean is that for now we are talking about like separately about what like the deliveries of the technology and the technology itself. But for people, it's like there is no need to understand how bank works to use the bank. They just understand what they would get if they would go to that bank. And I believe that we are approaching this level of clarity with cryptocurrency, and as it become and with tokenization, with everything related to blockchain, and whenever the discussion comes to that point, it is already easier to understand what would I get and less to learn about how would I get. And we will have different kind of education, not how it works, but probably for those who want to deep dive, for those will be different kind of education and more high level, like just step by step guides.
Great. Thank you, Lisa. Kevin, I'll ask you the same thing. Like, do you have anything you want to add on that one?
Yeah, so just to close it out on what you asked specifically about the AI's role in all of this, I think that it's very ironic. It's very difficult to do today. I think it's going to take some time, but we have to treat the AI as the coordinator of trust. And that's crazy to say out of my mouth right now, or to say with everything going on in the world, especially with the politics of the AIs, the malicious activity that is happening right now from some of the largest companies. We still haven't seen ads come in, and that's going to be fun. But Palantir and OpenAI, these are not very clean enterprises in its encompassing all of it. But what's to say that they're not doing good? Is it net positive or net negative? And that's for the individual user. I know a lot of people in my circle, and some of the smartest people that have addictions to what's going on, and that's not just to GPTs, but they've lost themselves when it comes to speaking to AIs. And it's a validator of giving you what you want. But if it turns into a validator of trust and not just a prediction machine, then we can build the markets where tokenized assets become extremely reliable and transparent for everybody. If you put the guardrails and the right incentives around these AIs, that's an extremely powerful tool. And if we can if we could put the trust behind it, and I don't see that happening yet, and I don't know what it's going to take. That's above my pay grade. I don't know how we get there. I do think it's going to have to be at the government level. Obviously, each government will act in accordance to their own laws and rules and regulations. One will be religious-based countries. One will be economical-based countries. One will be more control-based. Just in those three examples, you can look to the Middle East, you can look to Southeast Asia, and you can look at China for control, for religious, for economical purposes. So what's to say each one is better than the other? Again, I don't know. I don't have that answer. But AI doesn't replace assets. It'll just convert them into better behaved data-rich engines where those data factories with guardrails and safeguards can be extremely powerful. Add the trust layer, and now you have all you want out of what this great technology is supposed to be promised to us. Otherwise, we turn into what's that Will Smith movie? Not I Am Legend. The
Men in
AI,
Black.
what's that? No. The AI robot one where the robots take over, the world or whatever, because like the company at that movie, which is a very real world example, didn't put the safeguards and didn't put the reliability and the trust, and the robots took over. And that's
You're
funny.
talking about iRobot, yeah.
But that's actually happening right now with the GPTs. They're quite
Correct.
literally taking over our brains.
That's true. So let me ask you guys one last question. With RWAs growing into $1 trillion market, I mean, the amount of things that are going to be tokenized and the amount of things that are coming in is absolutely spectacular. So, what's the single biggest unlock, in your opinion, that can AI bring into the space? And give us like, I want to have like a 20, 30-second insight from each one of you.
The biggest unlock?
Yeah, pretty much the biggest unlock AI can bring in the space. And what's your thoughts on it? On the, like, just give me a final 20 seconds insight about what we spoke about and anything that you would like to add. Surya, you have anything you want to say?
Yeah, you talk about the biggest unlock between these two technologies.
Correct.
Okay, so again, as I mentioned earlier, probably we can see a lot of financial rails will be announced soon by the institutions and financial companies, both including banks and all these players, and they're just right now watching and just to see, just they're just testing their waters, right? So eventually they'll be on that. I think I can see that as a biggest unlock by
And you also gave us some
institutions.
good examples as well with what's happening in Kenya and a few other countries as well.
Yeah, as I mentioned, apart from regulators like Kenya, the industry is also maturing now. Think of like earlier, before all of these, when you talk to a developer, it's very hard to even convince, like, okay, what's this technology, how can I even get it benefited with this, raising capital for building a, let's say, five story 10-story building. Now they're at least able to understand. So this is a long journey. It's not like, we
Sure.
just build a solution so that opposite someone can easily understand. As Kevin mentioned, it's not that easy to convince people, but yeah, sometimes we are far ahead talking about all of these, but we sometimes very easily convincingly ignore the stakeholders who participate in this, right, from developers, the channel partners, the investors, and the regulators, and so on and so on, right?
Right.
So if we can solve that, we can definitely look into a big unlock of real assets to be on chain. Um, and the second one is the a cross border investment opportunities. Right now no one has the privilege. I can see that that can happen in next probably 10 years on the line, not immediately, not even 5 years. So that with just a passport, I think Dubai already proved it. With just a passport, Emirate ID, you can invest in Dubai market. So we can see that that can happen in other countries across the globe. That will be the biggest unlock probably.
Perfect.
And third one would be awareness on private markets. So far we know how public markets works, and very few people know what is private markets and how this can really add value to their portfolio, investment portfolio. I think that will be another biggest unlock with this tokenization and AI conjunction. Yep.
Perfect. Thank you, Surya. And Lisa joining us not from the dark side, but what are your closing remarks?
Sure. Think it was like some power problem in my home,
It's
but
okay.
luckily
I
from
come from
laptop.
Lebanon, so for me it's a normal day back home.
Yeah, I wanted to add like about the unlocking opportunities. I would say that the biggest unlock I can bring is actually speed of everything, speed of decision making, speed of like processing things, and the almost total elimination of human mistakes, which like often like are a part of any process. It's like either it's trader's mistake, but it might actually also unlock different kinds of problems, like where recently where when we seen like bitcoin price going down, there were a lot of discussion on the market, like is it related not just to like whales decisions but also to people having these stop loss mechanisms. So I think that we will unlock great opportunities to be faster, to be clearer, to be more trusted, to avoid mistakes. But at the same time, we will unlock new problems that we never experienced before and new solutions to, like, new problems to solve.
new problems are going to come in with it as well. Thank you, Lisa. Kevin,
Yeah, I do think speed. I think I'm going to take the capitalistic point of view here. Probably an unpopular opinion from a capitalistic, pure capitalism point of view, but the greatest unlock will be a 24/7 trading market. And you said 1 trillion in
very true.
assets. It's more like 10 to 20 trillion in assets.
Absolutely, absolutely.
And so once the 24/7 markets, the real time interface, the low latency, live trading, hedging, and automated underwriting demand that are sub-second interfaces, that's going to be the largest unlock. If we're talking about, again, I'm going to take the capitalistic point of view because ultimately everything will go digital. And once it goes digital, it's about, like Lisa said, the speed and the real-time interface for low latency. The high-frequency traders are already doing that on traditional markets. What does that look like in the future? 10x, 100x, a million x, and that's extremely exciting, but equally terrifying for the little man. And so, whether it's going to create more of a gap, everything tends to create a larger wealth gap or distribution gap or whatever gap. So I think also, and I'll add in second opinion on compute. Compute is a competitive moat that and sustainability headache. So offering opportunities for compute and how to democratize that, because it is very expensive and it's very much lacking. Again, the GPUs will arrive. The problem with the valuations of some of these companies, which you saw like the Michael Berry tweet or things like that, is that all of these GPUs will go non-existent in 36 months from now. And so what are these valuations doing? They're banking on more GPUs hitting the market and the speed increasing so that we can solve more of those problems. So I do agree with speed and low latency options. And just to look at that from a non-trading side, I come from gaming. Right now, a gamer cannot from LA game with the person in Dubai, game with the person in Tokyo. This will change. And because of the powers that be and what's happening again in bandwidth and latency is extremely exciting. So whether you're on a new iPhone or a 10-year-old iPhone, a person from LA, London, and Tokyo should be able to play together at the same speed with the same power. So trading aside and capitalism for fun and gaming, I think it's equally powerful as well. So very excited about the next 5 years. And I think 5 years is a lifetime away. I think in the next 2 years, the next 2 years is going to be incredible. The next 18 months will be figure out. And then the following 6 months, we're going to see things that none of us have talked about today.
I agree with you, Kevin. Thank you very much for this very insightful conversation. Like really, Suresh, Lisa, Kevin, your perspectives were sharp, grounded. Like I love where the space is heading. And to everyone tuning with us all around the world, thank you for being part of the episode 10 of GPU Verse Live Dialogues. If there's one thing
Appreciate it, thank you.
Thank you, Kevin. And thank you for joining us all the way in the morning. For us, it's a little bit more of a normal long day over here on a Friday. So the future of RWAs won't be just tokenized, like it will be more intelligent, and AI will price assets better, they will verify faster, the accessibility and unlocking global access like never before, as discussed. Just to remind people as well, at gpu.net, we are building the decentralized compute layer that powers those intelligent systems. So if you want to experiment with AI agents, tokenized models, and RWA intelligence, you can try free GPU compute credits on dap.gpu.net. And you can also deploy a subnet at subnet.gpu.net. And you can also join the global community on Telegram, which is GPU Network. That's the name of the group. So thank you again for being here. I would love to really thank you, each and everyone. Again, Lisa, thank you for your time. Surya, thank you for joining us as well. And Kevin, thank you for your beautiful insights. And always keep building and keep innovating. Like, let's definitely meet up again soon, and would love to see you all in Dubai.
Thank you, Asped. And for the GPU.net team, because of how I want some extra credits. All right.
Exactly.
We
We're getting
earned our
some.
credits today for my three
Absolutely.
panelists. So if you're hearing us out
Absolutely.
there, I'm a big fan, but send them. I'm kidding. I'm not kidding, but I'm
Let's do
kidding.
it.
Great. Thanks,
All
Have a
guys.
right.
great
Thanks.
day,
We're
everybody.
on
Bye.
it.
Have a great
Thank
day.
Thank
you.
you,
Bye.
everyone.
Take
Bye
care,
bye.
everybody.